Wednesday, June 21st, market analysis, Stan Ehrlich. I'm a little late this morning. Sorry, this is about 10:45 California time. Usually it's around 9:45 to 10. So we have lower lows in the stock market indexes. You know, I start out with the S&P and the indexes and then go to the futures markets, sometimes sectors and euros or forex and crypto, depending upon whether there's something important involved. Now, the S&P has made a low lower than the last couple of days, a couple times now. The downside correction I've been looking for has apparently started a couple of days ago. And in overbought condition, we talked all about that. We're now getting close to the first significant support area. Let me pull up the daily vertical bar chart here. And of course, you know that daily vertical bar charts have the same exact information as a candlestick. It just looks different. So I started out with these kind of charts. I prefer vertical bars. We have a little bit of support around today's lows. It bounced off of it already. It's not significant really, but when you start getting down to 432, you now start to dip into a support and resistance zone that has a many month history. I don't know how far back it goes, but it goes back a couple of years. Okay, yeah. And that is likely to produce the end of this leg down. Plus the fact that the gap that I want to get closed at 423-ish is at the bottom of that trading range zone. And other support levels a little bit lower, which is a possibility. It doesn't have to stop exactly where the gap is closed, although it sure as heck does sometimes. Now, so far so good. I'm looking for a lower close, not anything dramatic, but we're already down close to 2 points and have been down 3. The DIA is a little bit lower at the moment, 36 lower, and it's in the same situation as the S&P 500. So I'm looking for a little bit more of a dip on the Dow, mostly because there's a gap to close, and that would be down around 332 for the DIA. Now the QQQ is very much in the same circumstance. The daily data chart on the QQQ has also a gap to close, and that would be closed at around 333 1/3, and it's a bit of a distance from where it is right now. So this one looks a little bit less likely to get closed because of the significant time it might take to get down there, period. So the least likely, I guess, is the QQQ. Even the Russell 2000 has a gap to close below it, and it stopped its rally with a bearish ER, sell signal on the high of the rally, and in a resistance area, and with overbought conditions, and has now made lower lows in the last couple of weeks, and is about unchanged for the moment. I got no trouble with it fiddling around this price range for a little while, but it should make a low lower than today's low in the next couple, 3 days, by the end of the week. All right. So that's the stock market indexes. Let's look at the futures in markets, and we start out with the E-mini, which of course is a futures contract, but also the same in the index as the S&P, SPY. So same kind of commentary, except that you know that the trading hours do create different signals occasionally on the E-mini as opposed to the spider. So you have to be cognizant of that. Otherwise, everything's pretty much parallel. Next chart is bonds, and it's held a bull trend line very nicely. It bounced right off of it yesterday again from the last, 3 weeks or so. It bounced off of it. I'm looking at 5 times or so. That's a lot. Now, if we start to get back up above this resistance level, which is not that much of a resistance to 229, that will indicate the greater likelihood of it popping into the highest high range for the year and the last couple of months of last year as well. And once we can get over, and I do expect that to happen, 135 basically on a closing basis off, it's going to run 128 almost at the moment, and bullish. I expect resistance levels to be challenged, but not stop much and overcome in maybe 2 months. Next chart is 10-year notes, same commentary. It didn't quite test its bull trend line like the bonds have done amazingly well in the last 3 weeks. But it's got a little resistance above, not too bad. And I am long-term bullish on interest rate futures in general, period. Energies, crude's a little bit higher than the last couple of days, still in a resistance area. I really doubt that this move up is going to go much further. 175 seems plausible. A chance above that, but that's my best shot for the moment, and would be looking for sell signals in that ballpark price level in the next few days. Next chart is heating oil, and it is in neutral territory on the RSI, and it's coming close to a major bear trend line, at which, by the way, we got 2 bearish engulfing ER sell signals at the greatest spots you can almost come up with. Well, we could have got the top there, but we did get the top there. And we got the top way over there on the left. So looking for very little continuation of this rally. I think we're getting close to the high of it and looking for sell signals. Next chart is natural gas. Now we had a sell signal, and actually 2 of them just recently, along with a buy signal. So look in May 12th, we had a buy signal. It came down into the great perfect and went up for a few days, got overbought. And I know that our trailing stop would have gotten out more likely than not on the 22nd someplace near the middle or upper part of the range. Now down it came a little, and then we have a bearish engulfing, which was an excellent signal into oversold conditions and a bit of support. Turned around, and we have yesterday a bearish engulfing ER sell signal, brand new. Today's rally high is just a hair above the red new short selling price. We almost sold a high of the day so far. Let's see what happens next. And gold broke its bull trend line and has been making slightly lower lows, and this is for the last 2.5, 3.5 months or so. Does have support at lower levels. It's not quite oversold, but came awfully close today. I'm kind of expecting it to bounce and bounce back up to probably 2000. Next chart is, and oh, by the way, we did, of course, get the bottom of the gold market right there on February 28th, the first low of a little double bottom that happened to form. And now silver, we got the bottom of the silver market on March 10th. And oh my God, both highs on a double top formation, which worked perfectly to its minimum downside objective, and then had a bullish engulfing ER buy signal at the bottom. Come on. Okay, so after that rally, we don't have a signal, and the trade probably lasted until about this 13th or so. And we're slipping. And today we challenged and broke the low of that bullish engulfing ER buy signal. Of course, we're long gone. We're not in the trade for at least several days past. And unfortunately, we didn't get a sell signal either. Too bad. But I am now looking at probably a swing down to test the approximate price range of 20 or so, 2021. In fact, the lows in March. Next, platinum. Buy signal did not hold, did not work, but for a fraction of a day or a day and a fraction. And then we're getting into oversold conditions again today and yesterday. We're coming down to previous lows, which is an excellent buy signal. As I mentioned, all 3 precious metals, and this is February 27th of this year. We did get a sell signal. It wasn't at the highest high by any means, and it wasn't really a good signal, period. Probably have a small loss or a small profit. Anyway, now I'm looking for a move down to test these lows at 913.14. And we might bounce a little first because we're now oversold. So maybe a little bounce, but then keep on coming down. Next chart is high-grade copper getting overbought 2 out of 3 days, up into resistance levels, looking for it to turn back down again. Next, soybeans and grains. Whoa, this is a very sharp, big rally here. And the last 3 days or so, 4 days, RSI is now close to 90 almost at 87, 88 area, which is extremely high. And in fact, the highest, I can go back a little over a year, the last time RSI got up to this territory. So it is extremely likely that it's about to flip-flop back. Oh, and the high of the day today is almost exactly a previous important high on February 13th. That's it. Probably today's high is a short-term high, and the dip could be easily back to about 1444. Next chart. Bean oil already starting to head south. Very unusual combination, by the way. Bean oil down as much as it is, and the beans just skyrocketing for a few days. Okay. Looks like bean oil got overbought, and hit some resistance and punched through it a little bit more than you might expect, and is now back below them again. So I'm looking for a move all the way back down to previous lows here at about 46.47. Next is meal, soybean meal, just getting overbought now at some resistance. I'm expecting it to turn back down also and make lower lows than the last couple of weeks. Next, corn, and overbought as well, up against previous highs way back in October. Resistance, I think it's going to top out immediately and come back down to at least about 616. Wheat finally is almost up against a resistance level that's been proven to be pretty significant and getting overbought substantially. So it's at 89, almost 90. Basically anything above 90 is extremely likely to top out very soon. Now, the extremely volatile price movements could be dramatic. In other words, take only hours to do extremely wild things. But the amount of time left is probably not much. And the volume vertical movement, that is, can be really violent. Next, and I think it's about to top out on wheat. Live cattle had 2 signals. One was on top of the market. Talked to you on the day it happened, of course, on June 7th. It's worked just great. Today's a new low since the 7th, and we had another sell signal that's working great now for the last 2 days as well. Next, lean hogs, live hogs, got oversold, now is significantly overbought, and a higher high is not holding very well, around unchanged at the moment to a hair lower. I'm thinking this looks like a good spot where it might just top out today. Yeah. So I think maybe today's high is the high of the rally in decently overbought condition. We'll see what happens the next few days. OJ, not too much to say. It rhymed. And could be building a top formation. I'm going to have to pass on this. Cocoa, overbought, needs a little correction. Trend is just great. It's still stair-stepping its way up, getting a little bit increase in momentum, and that can become very dangerous longer term. I don't see any major top yet. A dip back down to 3030s would not be a surprise. We'll see what happens if it can come back down kind of to this little trend line over the last month or so. And next is cotton. Again, we need a major upside or downside breakout in order to stir some interest here. But this is a huge sideways trading range that's a yawner. Next, sugar the sweet. I'm mentioning the last couple of days, possible double top formation. This is exactly how the last high might develop. So we're going to see if the lows of the last few days hold and start to push back up again. That would endanger that potential double top and could get quite bullish pretty quick. Not sure. I'm looking at double top possibilities. Too soon to say. Next. E-mini, like before. You guys have a great day. Talk to you again. Mañana.